All right. Let's begin. Let's begin. So yesterday we talked on. I said yesterday the last time we did our live chat, we talked on support and resistance zone, and I said that today we'll be talking on entries, candlesticks, and chart patterns. That's what I said we'll be talking about today. So basically today we'll be talking on candlesticks and chart patterns. So if you can hear me, just drop hi on the chat so I know that I'm not alone. If you can hear what I'm saying right now, just drop hi on the chat. So today we are going to be talking on candlesticks and chart patterns. Alright. So basically, when you come into the chart from the last video I explained, the first thing you need to do is mark out your zones, right? So let me go back in time. Let me go just replay this chart a little bit. Now, so basically, now that you're in the charts, right, and you've seen everything in it. First things first, the first step is to mark out your zone. Mark out your zone. Mark out your zone. So let me get the rectangle tool. Then you mark the zone out. From let's just see from this low right here. Marked out. Let me zoom in a little bit. Alright, so now this one is like a perfect example. Let me just go back a little bit again. Let me just go back a little bit again. This is like a perfect example I can just use right now. So basically, you can see that price touched the zone the first time here, right? Like I used to say, when you come to the chart, you try to like mark out your zone. So we have the first touch here, then we have the second touch right here, and like I said before, what we are expecting is the third touch, right? So right here is now we've seen the third touch go. Not just because we've seen a third touch, we should be entering the chart immediately, right? So basically, we've seen the third touch here. What the next thing is that we should wait for a candlestick confirmation to confirm our entry. So now that we've gotten our third touch right here, the next thing that we should be waiting for is our entry trigger. So let me play. So now this one here is one of the best entry triggers you can ever have. This is the bullish engulfing. This is like the best entry trigger you can have anywhere. So the moment this bullish engulfing just comes out, we'll be going long. So I'm just using this as an example. So let's say if I was not, or this is currently happening on the chart. So this is how I would have entered this trade. Why? Because first of all, I marked out my zone. I saw two touches on the zone, and on the third touch, I saw a bullish engulfing. So let's imagine we're actually going long on this trade. Like I said the other day, whatever you're risking, you always target times two, and you always set your stop loss at the recent low. So this is the recent low because you can see this weak rejection right here. So we just set it at the recent low, at the lowest point the market ever got to recently. And it's obviously this place right here because of this weak rejection we are seeing here. So we're risking 20 pips, so we'll target 40 pips. Target 40 pips. That's 43 pips. All right. You can see the risks and returns. That's 2 point something, 2.01. So this is 2.01. So this is basically how it is done. So now let me play and see what happened, and let's see what happened immediately after that. All right, guys. So you guys can see that the market actually went right straight for the take profit. Now you can see what having good stop loss can do. price came back down a little bit, but because we've set our stop loss correctly, that's the thing about having good stop loss. Some people would have set it too tight and price would have hit this way. You hear people saying price is my stop loss and started going in my direction. So in order to avoid all of these mistakes and all of these unnecessary losses, you need to set your stop loss at the recent low. Someone said I can't connect. Why? Why can't you connect? Someone said I can't connect. I can't connect. Let me drop him a voice note. I think that has to do with your network. Try to like put your phone on airplane mode and come back, and maybe it would actually connect because that would be a fault from your own network. All right, so back to the charts. Back to the charts. So yeah, this is basically how it works. How it works. So guys, on the chat, drop if you have any questions, like let me see if you guys are with me. Like if you guys are understanding how I trade and basically my confidence, just drop it. If you're understanding me 100%, just drop it there on the chat. If you're understanding me 100%. But if you have any questions or you have anything that you're not straight on, just drop it on the chat. Ask the question right now. But if you're understanding me 100% from last week, or be from was it last week from on Monday to this point, just drop it on the chat. Let me know if you guys are getting me straight. All right, while Orolua is typing, let me go back to the chat. Let me see if I can make good with another example so everyone can see. All right, I think I'm seeing a good example again. All right, guys, so we can see this. Let me use this second example right here of where this strategy or pattern of trading worked really well. So you can see our price has touched on the zone right here first time. Come on, carry it here. Keep my own phone. Can see that price has touched on the zone the first time, the second time, and it's coming to touch back the third time. So from this, it's quite simple for us to understand that the next thing we are just waiting for is the candlestick confirmation. You can see how simple this strategy is. It's not complicated. Nothing complicates this strategy. Just all you have to do is wait for the candlestick confirmation. So let's play and see the candlestick confirmation that we would get. All right, so basically this if the candlestick moved too fast, but where I would have entered this candlestick, we call this one the pin bar. In this candlestick pattern, whereby you see a wick right here, you see this wick right here, and by followed by that wick, you see a bullish candlestick. So basically, what this thing is trying to say is that price came down to the point where this wick was, but the sellers were not powerful enough to keep it. So buyers pushed it back up and even extended it all the way up to the highest point of that wick. Extended it up to this point, right? So that is basically what it is, and because of that, it left this wick right here and it put up to that point. So basically, when you see a pin bar like this, what you have to do is you don't enter immediately. You enter after the second. If the second candlestick is still bullish, then that is a complete pin bar. Then that is a complete pin bar pattern. What you have to do is wait for the pin bar itself, followed by a candlestick that is in the same direction, whether it's a buy or sell. So I would have entered this trade exactly at this point. I'll have entered this trade exactly after the close of this candlestick, exactly at this point. Set my stop loss at the recent low, just a little bit at the recent low, as usual, and we'll target times 2 as usual. And yeah, we'll allow the trade to play out and we'll see the results. Just again, you can see how it has worked in this second case scenario again. So this is basically it, and understanding how to play stop loss will really help you in the long run, because even though that I understand stop loss placement, how to set your stop loss at the right point, most of the time would have been stopped out and market to start going in our direction. And one thing that you need to understand too is good risk management. This strategy helps with good risk management because at every point in time you're risking 1% to get 2%. So, and second thing you need to understand is this I've tested this strategy like 5 years past it, and it has a very high win rate. If you can be patient enough to wait for good setups, you won't just be wanting to enter anyhow setup. If you're not sure why you're entering, don't enter the trade. If you're second guessing yourself, don't enter the trade. If you've not seen the third touch on a zone and you've not seen a good candlestick pattern, don't enter the trade. Basically, don't force trades. Forcing trades would look like would be like you're hurting yourself in the long run, because at the end of the day, you just keep entering trades and getting unnecessary losses. You need to get to the point whereby even if you take a loss, you need to say, yes, I followed my rules and I'm happy about this loss. You need to get to the point whereby not when you take a loss, you're angry because you know that it could have been avoided. But you need to take the kind of losses that, okay, you know that, yes, I'm confident that this loss couldn't have been avoided. That is when we know that, yeah, we're getting it. So that's it, guys, for today. That's it, guys, for today on candlestick patterns and chart patterns. If you have any questions, drop it on the chat. I've recorded this whole live chat. So if you need the live to watch it on your spare time, just drop it on the group right here, and I'll be sending it to you. Also, there's a book called Candlestick Trading Bible. In that book, they taught about most of the best candlestick pattern that you can find out there. So it was from there I got the bullish engulfing that really works well, and the pin bar too. So basically, you can read that book for yourself, understand candlestick patterns, and inculcate what is written in that book. In terms of candlestick pattern, you can check and backtest for a very nice candlestick patterns you can use as your entry. So if you need that book too, just drop it here on the chat, and I'll be sending you the book too. So guys, if you have any questions, drop on the chat for me, and I will be answering your questions. If you have any questions, drop it on the chat for me. Yeah, the price are correct, but there's always a slight difference. The prices are correct, but you don't expect it to be the same thing, because they are both like different liquidity providers. But at the end of the day, it's the same thing, because even your MT5 and your trading view are two different things. Are always at two different price points. You can never accurately see two different markets liquidity providers giving you the same time. So it's not the same, but is still accurate. I don't know if that answers your question. So any other questions? Any other questions? So is there any other questions? And we'll be calling it a day. And the next live will be on Monday. Monday. As you guys can see, I'm not even home. Like This week has been really really hectic. I'm not even home. Where I am, I just had to bring out my laptop and start recording this live right now. I'm not even home right now. I've been really busy. That's why I've been postponing this live. I just had to like say, no matter what, I'll still do this thing today. So, and here I am. We're almost done. Um, say what is liquidity and structure? So basically, structure. What we mean when we say structure, structure is basically like what would I use as a better example? What would I use as a better example? Structure like the way same way you have a house, the same way you have a house, right? Before the main house is built, there are structures that are made to help the house stay active in the long run. So just like our charts, before you come into our charts, right? You have to wait for three touches. That is the structure. Different strategies have different market structure that they are waiting for. Like our market structure is basically three touches. Like the same way you have a structure for a story building is a different structure you have for a bungalow, different structure you have for a skyscraper. So that's basically structure is like the backbone of whatever you're doing. So the structure of this our market is, or what do I mean? What am I even saying? Say structure is the backbone. That's what I'm trying to say of your trading. So that's what structure is. I've answered your question. So have I been able to answer your question? Okay. Liquidity is where there are lots of market participation. Like when you say the market is really liquid, that means there are a lot of people actively participating in the market. Like during the London session or the New York session, there's a lot of liquidity, meaning that there are a lot of banks, there are a lot of hedge funds trading at that point. So if someone now tell you that there's a lot of liquidity in the market, and then I say, look at this zone right here, there's a lot of liquidity. All that means is there were a lot of trading that happened at that point. So wherever you have like a lot of weak rejection, let me go to the chart. That means that there's a lot of liquidity right there. Like now, you can see these zones. These zones here are point of liquidity because right at this point, this is where you can kind of like see that there's a lot of wicks and a lot of more candlesticks at that point. So it's basically the point of liquidity. Liquidity is just basically where there's a lot of market participation. A lot of banks at that time, like during the New York Open, that is 12 p.m., 1 p.m. thereabouts. There's a lot of liquidity in the market. During the London Open is 7 p.m. to 8 p.m. That's where there's a lot of liquidity. That's London session. New York session is 12 p.m. to like 1 p.m. That's the Open. There's a lot of liquidity during that period. So that's where a lot of banks, a lot of market participants are entering the market. So during that period, you see a lot of volatility in the market. The market will be so volatile because of that amount of market participants making the markets liquid. That's just basically what liquidity is. So have I been able to answer your question? Any other question, drop for me in the chat and we call it a day. Alright. So if there are no other questions, I'll take my leave now. I'll catch you guys on Monday. Hopefully. Monday, 7 p.m. I'll see you all. Bye for now.